Is my camera good?
Yeah,
Good
you're looking
position?
good. Yeah.
Yeah? All right.
Hey, this is John Feneck of FeneckConsulting.com, and with me today is Dave Erfle, my good friend from JuniorMinerJunkie.com. Dave and I met back in 2017 when I was an exec for Sprott. And Dave, welcome.
Thanks a lot, John. Thanks for having me on, and congratulations on your new business.
Thank you. I appreciate it. It's a lot. I owe a lot to you. So thank
Oh,
you.
anything I can do to help you, man. It's great. It's great. It's great to help people in this
Yeah,
sector, especially.
absolutely. Yeah, we need to stick together. And so we were talking
Hmm.
about that just at the onset here about how, competitive investing is and advising clients is. And, I always value having, partners in the business like yourself. Can you talk to the viewers a little bit about how you got started, not in this space, but, how you got started with the the subscription service you offer?
Sure. Yeah. Well, I can go back to when I started writing the weekly column for Kitco back in early 2016. I was a good acquaintance of mine was Daniela Camboni of Kitco,
Mhm.
and she'd asked me to do a weekly column for Kitco back in 2015, and I said, well, it's still kind of early, I don't think anybody'd read it because this sector's getting hammered pretty hard, and I think
Right.
it's going to continue for a little while longer. And then I ran into her at PDAC in 2016, and we talked about it again, and I said, I'd love to. And, I'm not a writer. I'd never written a column before, and I was a little intimidated. And if you go back and read my early, pieces, and I've grown quite a bit since then. But so I started to write that column in March of 2016, and was writing it for about a year when I kept getting a lot of emails from people saying that I should start a subscription-based newsletter, and they would sign up. And I said to myself, man, that's a lot of work, but it's probably a
Mhm.
good idea since I just had a baby, and I'm going to need a lot more income here. So I went ahead and started the Junior Miner Junkie service in April of 2017, and I started out in the sector, like most of your audience, as just a retail newbie, not really knowing much about the sector. And I learned a lot from subscribing to newsletters. I subscribed to a whole lot of newsletters back in the early 2000s when I got into the sector.
Sure.
And I learned a lot from newsletters, and I learned what to do and what not to do as far as newsletters are concerned. And I said to myself, well, I'm gonna put a new twist on the newsletter service here in this sector and be completely transparent, meaning
Yep.
that I'm a professional speculator in this sector, and I have a pretty large portfolio. It's about $1 million portfolio, and I'm going to share it with my readership, and they know exactly what I buy, when I buy it, how much I sold it for, how much I made, how much I lost, warts and all. And before I purchase a stock, I'm going to write up a report on that stock and issue it to my subscribers before I buy it. So I'll issue it the evening that I plan on buying a stock, the day after, and tell them what price I'm willing to pay for it. And I limit the subscribership to 500 members. Now that the liquidity in the sector is a lot higher, I limited it first to 200 because there wasn't a lot of liquidity in a lot of these juniors.
Right.
So I wanted to make sure that we all kind of got in at the same price. But now that the liquidity's raised quite a bit now in the sector, that the retail generalist investor has come into the sector, I've raised the minimum to 500, and it's working really well. I have a great subscriber base. I'm a much better investor. I'm a much better researcher because of this business, because I feel that I have to do as much research as I possibly can to buy something, because it's not only me buying it, it's
Yep.
my subscribers that are buying it, and my reputation's on the line if
Yeah.
if it goes bad, and like it can in this sector very quickly.
For sure.
So yeah, it's been a fun ride. Like I said, I got a lot of great subscribers, and I get emails constantly from people that are appreciative of me teaching them how to navigate this sector, because that's what the newsletter does. They're following me, what I do. So I'm teaching them as I go along. Risk management is job number one in this sector, as you know.
Totally.
It's all about risk management. So, I'm teaching them how to make money, how to lose gracefully, and when you do lose, make sure you don't lose a lot, and you learn the lesson from your loss.
Really well put, and a lot of what you said resonates with me. And we started our alert service last year. Let's see, it was fall of last year. So we were, as you know, I've been doing similar to you, running a portfolio, not as long as you. We'll have our 5-year anniversary this week, and so we were up 72.7 last year, and got a lot of clients that were looking for direction in the space, and wanted something a little different than the service that you offer. They wanted something that was more active, and I have a contingent of people that want the passive, build a portfolio, put it away for months or years. But we do offer an active service where every single trade, I took a page out of your book, and basically, as soon as I'm thinking about doing something, it's out there in an email. So I'm putting my money alongside my clients, and I'm telling people how to buy in proportion so they don't overbuy. And I constantly have phone calls with clients directly, which is time consuming, but very helpful. They find it helpful, and I find it, great to build relationships across the globe. It's really cool. I've talked to people in Australia, Austria, and Switzerland just yesterday. It's an awesome business, isn't it?
Yeah, absolutely. Yeah. I mean, my first subscriber is from the Faroe Islands.
Nice.
Yeah, I mean, it's great. People from all over the world subscribe to the service. It's fantastic. Yeah.
Yeah. So tell us a little bit about your sell discipline, because I've heard you speak so many times, and understand what you look for in a company. But could you share a little bit about some red flags to help investors, in this kind of a market that we've seen here since the high in August, even, and just we're just starting to rebound here about 2 weeks ago, right?
Sure. Yeah. I mean, I have my rules that I adhere by religiously. One is, if a position becomes 10% of my portfolio, I'll cut it down.
Okay.
Another one is, if a stock that I purchased is down 20% and it's not a micro cap. These micro caps can be very volatile, and technical analysis is kind of useless on them. So if I've lost 20% on a stock, I'll usually cut it. So I'll take the loss and say, what, my timing was bad on this one. And it's happened. It happened recently here during tax loss selling season. I had one position that was down over 20%, and I still like the company. I still like everything about it, but I've done really well, like most people, this year in the stock market, and I'd rather take the tax loss and put the money into something else that somebody else is selling for tax loss,
right?
and at a better entry point, and do it that way. So that's another one. But the biggest one is, all my realized capital gains are taken out of the portfolio each year.
Okay.
It's I started the portfolio with about 475,000. So that's plenty to have working in this market. So whenever I have a realized gain, by the end of the year, I take it out. So all realized gains are taken out of the portfolio by the end of the year. This is, I've been through a few of these cycles, and you learn so many things at the peak. When everything's going good and everybody's happy and we're all making money, that's, the first time it happened, I took some off the table. The next time it happened, I took a little more off the table. So, now when this one tops out, I'll be taking a lot more off the table.
Right.
So it's, it's risk management is really huge, because this is one of the highest risk sectors on the planet. And it's very difficult to analyze. And it's, let's face it, 85 to 90% of these juniors are garbage.
Mm-hmm.
It's up to you to find, a basket of them in that 5 to 10 to 15% that are worth investing in and worth holding on to for a mining cycle.
Yep. And we're fortunate enough to share some clients with you, and I think we have about 10 in common, at least that I'm aware of. We have about 35 holdings right now as of November 30th. Where are you right now? About 25 to 30, or?
I don't like to have any more than 30.
Okay.
Right now I have 29, and I have some unexercised warrants and some others, but I keep it under 30, and
Gotcha.
I don't invest any more than 4% of my investment capital into one company.
Okay. We're a little different like that because I do come from the mutual fund world, and you know, typically you cap out at 5% weightings, and
Mm-hmm.
I don't do that, just because living in that world for 20 something years, it was frustrating to me that you couldn't, you know, put more money on a horse that you thought was going to run harder. And so when I have conviction, I'll do that, and I've done that recently, but I understand why you wouldn't. So, you know, you've been really correct in your analysis of GDX and GDXJ. I'd rather talk about GDXJ because it is the junior ETF that so many people are familiar with.
No, it's not. It's a mid-tier ETF.
Well, yes, I worked for the one that was the junior, right? And that's SGDJ, to give them a plug at Sprott. GDXJ is, you know, basing in the 49 to 50 kind of level, and now we're trading north of 55. So can you give us some thoughts on, you know, an entry point there and what your target might be for that?
Absolutely. You know, technically it's done exactly what it's supposed to do. You know, I mean, it ran up 180% in 4.8 months.
Yep.
So, you know, that's got to correct. And it corrected about 29%, I believe. And it corrected all the way down to its breakout point. It broke out of a 7-year base I don't have the chart in front of me, but it was in the summer, in July, I think. And it's come down and tested that breakout. And now it's bouncing back up. And the measured target of the breakout is 90. So I think
90,
that's
okay.
where it's heading.
Wow.
And but most interesting ETF to me right now is the SILJ.
Okay.
Because during this correction, since the middle of September, the SILJ has been showing relative strength to the miners. I mean, noticeable relative strength to the miners.
Mm-hmm.
As a matter of fact, today it's trading at a 52-week high. And the SILJ represents the highest risk subsector in the miners market. So, you know, this is a tiny sector as it is. I mean, the entire gold sector is about 300 billion. And if you take the silver space, it's just a fraction of that. And when you have the SILJ leading out of a correction, that's huge. I mean, a lot of these silver juniors are trading at 52-week highs. You know, they've been bifurcating. They've been going up while the correction has been going down.
Mm-hmm.
It's you know, the sector's been correcting, and the SILJ has been showing noticeable relative strength, which is huge. And after the Fed meeting, it really popped. And then today, the day after, it's popped again. I think it's a little overheated now, and you're probably going to see some selling come into it. But still, if you take a look at the SILJ to GDX ratio, it looks just like this.
Yep.
During a correction, not only during a correction, but during a meaningful correction after the GDXJ had gone up 180% in less than 5 months. Mm-hmm. So, you know, the miners bottomed in late 2015, early 2016. That's when the miners bottomed, but the juniors didn't bottom until this summer.
Yeah.
Sure, we've had more than a handful, you know, have go up multiple times of the quality juniors, but as a sector, it didn't bottom until this summer.
Yeah, I totally agree. And that's one of the things that we talk to clients about all the time, is that the gold price has been making a series of higher lows since the fourth quarter of 2015 that led this rally. Then the royalty companies followed suit. Then the larger cap names like Newmont and Barrick started to do well. And then the mid-tiers started to do well. And now you've got the juniors taking off this summer. And so you want to start reallocating capital away from some of the less risky names into some more illiquid and riskier names as this rally starts to get more legs, right?
Right, exactly. That's what's been happening. They've been taking their profits in the minors and putting them into the juniors, and
Hmm.
specifically silver juniors. So it's really going to be interesting. Now that tax loss selling basically ends this week. All the big money traders and fund managers are out of town on Friday.
Yeah,
They're gone.
yeah.
So most of the tax loss selling wraps up this week.
Hmm.
And we've had a lot of juniors get really way ahead of themselves in August. The GDXJ went up, like I said, went up about 180%. Some of these juniors went up 5, 6, 7, 10 times. So they're
Yep.
still gonna consolidate those gains, and also a lot of them raised money. So those private placement shares are coming free trading, and that's what's been happening on top of the tax loss selling. So if you're looking to get into something that you missed, you really got to be on the ball to make sure that you want to get in at the right time, because you don't want to get in too early, because it could still correct a lot more if a junior raised a lot of money, and especially if it raised a lot of money with a warrant and a lot of retail participated, because they're going to sell those shares and they're going to keep those warrants. So
It's
once
great
they
that
come, yeah,
you
once they
brought that
become
up.
free trading after 4 months and a day, that's what's going to happen. They're going to, you're going to look at it and you're going, I don't understand. The gold price is going crazy here. Silver's going crazy here, and yet this stock is going down. That's why.
Hmm. Yep. And do you have a source that you use to get that information, or is it simply going into each stock and looking at the news and then doing the math?
Yep. I do incredible amounts of research on a company before I buy it. Sometimes I've waited years before buying a company.
Yep.
Perfect example was Novo. I watched that stock for years. I talk to Quentin every time I see him at a conference.
Hmm.
How's the theory going? What's going on? And then when he told me that he pretty much got it sussed, we're about to do a finance, I said, let me in. And fortunately, I got in at the right time, and that's right when I started my service. So it was nice to start the service with a big win.
Yeah, of course.
I got out of the rest. I got out of most of it. Um, in 2000, late 2017, 2018. I don't remember when it was, but I got out of the rest of it earlier this year in January, and now Kirkland's got out of it. So I don't know if the story's still viable. Kirkland doesn't seem to think so, but I think Kirkland's gathering some steam here to purchase something else.
Hmm.
I wouldn't be
Okay.
surprised, because they've got a lot of cash, and they sold most of their Novo shares. I'm not sure if they sold them all. I know they sold at least most of them, and they've got a nice big cash hoard here, and I wouldn't be surprised if they pick up something else.
Interesting. So speaking of acquisitions, Monarch, which was a small holding for us, but a reasonably large holding for you, I believe, had a deal go down with Yamana AUY just recently. And what are your thoughts around that? I mean, here at 42.5 cents, it seems to me that at least it's a decent arb play, if nothing else.
Yeah, I was disappointed with the actual deal, which it hasn't gone through yet.
Right.
Because they're basically sold it for half of what the average of previous deals were made. The average cost in the ground paid for a deal like that had been around $85-$90, and they sold it for less than 50. And they also included a mill with it. So if this deal goes through, it's going to bring that average down.
Right.
In a bull market where the gold price is starting to rise again. But I know Alamos owns 16% of the stock, and
Hmm.
they just exercised their warrants. So they probably own maybe 17 or 18, maybe 19% now. I'm not sure.
Hmm.
Um, and I know the meeting is on the 30th. So I wouldn't be surprised if they make an offer, because now with the gold price going up, and these stocks appreciating, they already own a big chunk of it. And if they can get it, if I were them, I would make an offer for maybe $60 an ounce in the ground. and see what
Hmm.
happens. We've had a bidding war been going on since the summer in Cardinal Resources between a
Right.
Chinese company and a Russian company. They just keep one-upping each other. Investors are just sitting back, smiling, going, I mean, it's gone from, I think, 60 cents to $1.05 or something, the offer. I'm not sure what it
Yep.
started at, but I know it's up to about $1.05 now. So, it's always nice to see bidding wars in this sector, which doesn't happen often. The last time it was happening, it was, during the peak of the last bull market in 2010, 2011, and then, the uranium bull, there was bidding wars going on and deals going on, and we're not even close to being there yet. I do expect M&A to continue to heat up,
Hmm.
um, but I think we're going to see more deals of mergers of equals, also. So, this sector needs to consolidate. It needs to happen. So,
Absolutely.
yeah, but also, the thing to look at in what I'm seeing bifurcate from the sector now also is high margin, large projects at the feasibility stage or finance stage that are in really good jurisdictions
Hmm.
and that have 4 or 5 million ounces, already proved up, that are high margin. Seeing stocks like that bifurcate. So, people see what's going on. They see the M&A starting to heat up again. And all it takes is, one major deal to happen. We just had Premier Gold
Yep.
being taken out by Equinox.
Yep.
Um, we just had Teranga being taken out by Endeavor, which
Yep.
I was a Teranga shareholder. I sold on that deal because I mean, Endeavor is an acquirer. I was an Endeavor shareholder a few years ago, and did really well in the 216 run up. And then when they started to become an acquirer, I sold it. And it's
Hmm.
basically trading at what I sold it for 4 years later, because they keep acquiring
Yep.
companies. They
Right.
acquired Semaphore, and now they acquired Teranga.
Yep.
I mean, Randgold's gone. I mean, they're replacing Randgold as the premier African gold producer now.
Absolutely. Hmm.
So, yeah, I mean, it just needs to happen. The sector needs to consolidate a lot more. I think it's really going to start to heat up again next year.
So in summary on Monarch, that ticker is MRQRF in the States, and the ticker for Alamos would be AGI. The
Mm-hmm.
deal that you were referencing is December 30th. That is the vote, correct?
Right. And what I plan to do is, I've kept my shares,
Hmm.
hoping for, a bidding war. But
Yeah,
even if
me
it
too.
doesn't happen, I want the spin out, because the assets they're going to spin out are very good.
Okay.
And so what I'll do is I'll sell my Yamana shares if the deal goes through, because it's partial Yamana shares, and I'll put that money into the spin out.
Gotcha.
So I'll be getting spin out shares, and I'll add to it with the money I'm gonna make from selling the Yamana shares.
That's helpful. Okay. So lastly, you usually talk about a growth-oriented producer, a developer, and an explore code. You want to mention maybe one of those?
Oh, sure. Really undervalued stock right now. It's basically a turnaround story. Is America's Gold and Silver.
Hmm. Yeah.
They've had problems at Relief Canyon, their Relief Canyon mine that they just finished building recently. They had a stacker issue, and that's back on track, and they're starting commercial production by the end of this month or the beginning of next year, and they'll be at full production by April. And it's a low cost gold mine, so they're going to have cash flow from that. But they've also got huge leverage to the silver prices. They've got two other silver projects, the Galena mine in Idaho, which they made a deal with Eric Sprott. Eric Sprott owns 40% of it, and
Yep.
America's owns 60% of it. And they're finding tons of silver there. I think they're up to 190 million ounces there now or something.
Hmm.
That's their target by some point in 2021. Don't quote me on that. I'm not sure. But and they're finding it at like 5 cents an ounce. And Pierre Lassonde is also a big shareholder. So their two biggest shareholders are Eric Sprott and Pierre Lassonde, two guys that kind of know what they're doing. And
Absolutely.
they've also got that Casala mine in Mexico, which there's a blockade going on there now.
Yes.
And once they get that issue sorted out, which eventually they will, they've got over 100 million ounces of high-grade silver sitting there. And it's also a big zinc producer, and zinc is what, $1.28, 29 a pound right now. So
Right.
I think they're a zero-cost silver producer from that mine with the zinc and lead credits. So that's huge. So if they get all three of those mines going in 2021, it's set up for a huge market re-rate.
I
And on
totally
top
agree.
of that, they've got a U.S. listing, USAS, on the Amex, and a tight share structure. So once these Robin Hooders start to get into this sector, and they can't get into OTC stocks from Robinhood accounts. They're gonna be looking for gold, silver stocks, on big boards. And your average retail investor will be looking for gold, silver stocks on big boards. And fund managers will be able to get into these big board stocks that are trading over either $4 or $5 a share.
Yeah, $5.
I think it's 5. Okay, anything under 5 they can't get into. So once it gets over 5, then you've got that market, and the share structure is really tight. I think there's only like 100 million shares out, and the retail float I think is like maybe half of that.
Right.
So if you take a look at the 5-year weekly chart, it's got a huge base and it's ready to break out of it. So this is a turnaround company, a turnaround story, which is run by Darren Blasutti, who's one of the brightest guys out there, from Barrick. He was a corporate development. He was head of corporate development, I believe, at Barrick, and he's done a great job of putting this company together, lowering costs. And they've just had some bad luck recently, but I think they're going to start firing on all cylinders at just the right time as the sector starts its next upwave.
Yeah, that's a great summary. I mean, I've met Darren, I think through you actually about a year and a half ago, and we met again in Vancouver this year. Really think highly of him, and we own some of that as well. I think the market's giving no credit to Cosala at all, and the fact that zinc is going up benefits them along with silver, right? So
yeah, I think this blockade has been a blessing because they're not producing silver right now.
Right,
It's
right.
sitting in the ground while the silver price is going up. So once they're able to produce again, hopefully silver will be north of $30 an ounce.
Yeah. Excellent. Well, I really appreciate the time, Dave. And
anytime, John. I'll always love talking to you.
Likewise, and would love to plug your website again. It's juniorminerjunkie.com. And Dave,
Junkie
do you
with a
have
Y.
Yes, with a Y. And do you have an email address if people want to shoot you an email that you'd like to give out, or is it on the website?
Sure. The best email to reach me is oroyplata43@yahoo.com. That's gold and silver in Spanish, 43@yahoo.com.
Okay, excellent. Well, thanks, Dave. And we'll try to catch up with you hopefully early part of next year.
Look forward to it, John. Have a good holiday season.
You too. Thanks.